Let's take a look at some charts on Bitcoin from this week's article on Brave New Coin. So Bitcoin had a bit of a bump over the past week. In case you haven't heard, Tesla bought $1.5 billion worth. We don't know the final numbers yet as far as what their basis was or how many coins that is, but it's probably somewhere between 3,500 and 4,500 coins. It's 7.7% of their total treasury, at least at the time they reported it to the SEC. So that obviously has sparked a bit of interest across all markets. Not to mention that the alternative coins are also doing quite well, so it's a bit of an everything season at the moment. A few coins are outperforming BTC, most coins aren't, at least in the past week. So BTC is doing exceptionally well after a bit of a consolidation period for the past month and a couple weeks. BTC is a proof of work network, key retargeting time of 10 minutes as far as block times and difficulty adjustments. So since September 2019, hash rate and difficulty has just continued to increase. And this should continue to happen because more ASICs are coming this year. There's 3 that we know of, probably more. We're seeing orders of, the Tesla Elon stuff is interesting, but we've seen orders of companies just outright buying miners as a way to acquire BTC as well. Now, if the mining cost is cheaper than buying it outright, obviously that's a good deal, but you have to consider maintenance on that mining farm, getting all that stuff online, blah, 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 all the overhead that goes along with a mining farm. But we're definitely seeing extremely large orders of miners being purchased by companies to hold the BTC. Here's block times. Block times, they've been really relatively stable considering the instabilities we've had over the past year based on hash rate falling off before difficulty adjustment. This was a 16% negative adjustment, and that's why block times went way up, because as the hash rate comes off before the difficulty adjustment, the network hasn't retargeted that 10-minute time yet. Here's transaction counts and average transaction sizes. We had a big spike in transaction counts. I don't really understand the transaction count graph for BTC very well, because we get these extremely large gaps and spikes up and down. And I would assume this is exchange activity, in that it's exchanges consolidating addresses. There's something going on in the background with dust or something to spike this transaction count like that. That'd be my guess. Average transaction sizes, though, extremely high there. So not only was there a spike in transaction counts, but average transaction sizes spiked way up. So that was a multi-year high. Is that right? As far as transaction counts. We don't really see that anymore because the network has gotten more and more efficient over the years, especially since 2019, thanks to SegWit and batching mostly. If we look at the unconfirmed transaction pool, it had been relatively stable, sub 40K, sub 20K transactions, sort of on off times. And since January, the floor has basically been 40K with spikes into the 100K-ish unconfirmed. So just a lot more activity on chain, even on the downtimes than previously. So all this is just saying tons and tons of demand for block space. And we see that in the average block sizes, which are over 1.2 megabytes. So previously our ceiling was 1. That was raised thanks to SegWit. It's now between 2 and 4 megabytes. The average block size really has been 1.3 megabytes over the past few months. Just shows you the demand for block space. And you can also see the scaling initiatives paying off, because even though average block sizes are increasing, fees aren't skyrocketing, right? We're not seeing, like on Ethereum, for example, that has poor scaling, or BTC in 2017, 2018, the scaling mechanisms just weren't there. We were seeing the network get attacked, all sorts of stuff going on. Fees spike way up. Fees are definitely up and increasing sort of as a function of demand, but they're not out of control. They're around $15 on average to send a transaction. You can send that cheaper for a little slower, more than 10 minutes. If you don't care about the timing of it, as with any blockchain, you can sort of bring that fee down and it'll go to the back of the line. But fees aren't exploding. Here's active addresses and NVT. And I mean, if you're not bullish on this, So everybody looks at this active address stuff because there's not really a good way to measure crypto things for legacy people on the outside. We can talk about technicals and on-chain stuff and all this other metrics, but really what the legacy people look at is active addresses. So active addresses are an all-time high, above 1 million, above 1.1 million. Active addresses have held above 1 million every day for the past several months. So that is extremely bullish, just tons and tons of activity. You know, you don't want to die in the dark if you're a blockchain. If you have activity on chain, you will be bullish. Now you can be extremely bullish without activity at all. With literally zero activity, Cardano is a prime example of that. Zero activity, price doing extremely well, mostly speculation, mostly hype, mostly there's no there. BTC, you can step back and say, okay, there's all this activity, people are using it, maybe it's mostly speculative, maybe it's store value, maybe it's all these other things, but you can't look at BTC and say it's an empty chain. You know, mean block sizes are 1.3 megabytes, that's huge. You look at most of these chains, and like LTC, there's literally zero activity. Zero activity. So lots of transactions happening on BTC. If you look at NVT, inverse metric of economic utility, so NVT has increased year over year since 2016, really. Some of this is inflation related. I don't know enough about it to say, you know, it doesn't need to be retooled, it doesn't need to be adjusted. It probably does need to be adjusted, because in a vacuum, you'd say, all right, NVT is increasing, I should be bearish. And that just isn't the case. Obviously, price is at an all-time high. NVT is at a multi-year high here. Should I take that as a signal of this is a local top, or should I just not care because it's basically made a local high every year for the past 5 years, right? So it's hard to get a read on this, even though NVT was built for UTXO networks like BTC. It just doesn't make a lot of sense if you're using it as a trading tool. Here's MVRV. I like this one a lot better. Another sort of inverse metric of economic utility. It measures realized cap versus actual circulating market cap. So the realized cap is coins that have moved recently. And if the circulating supply market cap explodes versus on-chain activity, MVRV will increase very quickly. And historically, MVRV above 7 has been a top. So we're not quite there yet. We're at 5. We were in negative territory in March 2020. So it's been quite the ride for MVRV, as it has been for price. So I'd read this as bullish consolidation, really. This is probably the most concerning chart if you're bullish like me. This is UTXO's over time. It's showing you the age of the coins that are moving. So orange is a lot of new coins that are moving versus coins that are being held. So coins that have been not moving for the past 5 years are in the blue. Coins that have moved this week are in the orange. And I've noticed that the 1 to 3 month coin age, sort of this yellowish orange, when that's above 15%, we've been in bubble high territory. It's currently 14.1%. So I don't know if this represents, if it's truly a new paradigm, you know, if this time is truly different in that we're getting all these corporate treasuries looking at BTC and everybody and their mother looking at BTC, and maybe that's why this is up. Or I just read this verbatim in a vacuum and say, all right, look, if we get above 15%, I don't care what the price is. That's a lot of movements, because realistically, this represents holders converting into sellers. And eventually there's more selling than buying, and price can't sustain that. So this definitely makes me nervous if I'm bullish. I look at MVRV and I say, okay, we have plenty of room, right? And I look at this and I say, maybe you have to look at everything together. And you say UTXOs are 14, but MVRV's got a ton of room, something like that. Active address is rising, right? So it's hard to be bearish just on that alone. Google Trends, very bullish, not as bullish as they were in 2017, 2018, but multi-year highs, definitely lots and lots of search interest and activity. Looking at technicals, this is a moving average multiplier. In the green here is the 2-year MA, the 730 MA, showing you a buy zone. Anytime price gets below that level, that's a buy zone. And the red line is 5 times the 730 MA, and that historically has been a sell zone. Currently, it's showing a 55K level. So if price gets above 55K, or higher, all of that represents areas where I will strongly be considering moving some BTC to cash. Another way you can play this is if it breaks above the red line, you say, okay, it's time to start paying very close attention, because when it breaks down from the red line, then it's over. Then it's truly game over for that bubble, bull trend, whatever you want to call it. And that's when we have this multi-year bear trend. Now you could look to 2013, 2014 and say, okay, if we support on the midline, then maybe a rebuy. You know, you can look at this several different ways. I do like that we nearly tapped the top, retested the midline just as we did in 2017. So all sort of is going as according to plan, you know. So I don't expect this to pop to 100K without some sort of acknowledgement of this indicator, just because it's been pretty dead on the money based on the small sample size. Taking a look at the 50, 200 yearly pivots, VPVR, RSI, and Bitfinex long short ratio. So longs are spiking way up here, which is good. It's not concerning. There could be a long squeeze in the making, in that longs are 92% here for Bitfinex. Shorts are probably at their lowest level since a long time, years, multiple years. So everybody's bullish. I don't think it's a crowded trade. I just think it's just an obvious trade, right? So that's why people are bullish. Longs came down, longs back up as we're breaking the highs. 50 and the 200 has been crossed since mid-2020. So just in case you weren't sure based on trend, there's your answer. Above the 200, we're 2 times above the 200 at this point. 2x the 200, 2x plus. So there's tons of support at 22 should something catastrophic happen. Based on the 200-day moving average and the yearly pivot, plenty of support there. On the way up, we're looking at 60K, 80K as far as targets are concerned. Plenty of VPVR support below 13. Not a lot of support between here and 23 historically. You know, we normalized this 8 to 10K region, and there was a lot of volume in there. Now, historically, we haven't been up here very long, so not a lot of volume. RSI, a bit concerning as well. Potential bearish divergence, but you know, it's really hard to say that on the first breakup of a candle. It's definitely on less momentum compared to where the previous high was sitting. If we look at the cloud, just textbook long bull trend. The key, I think, with any trend following indicator is to treat every single long entry signal as something that has the potential like this. So even though you've had several long, even going back to early 2020, you've had several long signals that kind of went nowhere. This one was the most painful if you were long in that, but the big trends pay off for any of the small ones, right? So you're long here, you close your long, you're long here, you close your long, you're long here, you close your long, and then you re-long here in late 2020, and it's told you to hold ever since. It's told you to add twice now in January, and all that's paying off. So this is exactly the trend you'd be looking for in any trend following strategy. CME Futures contracts are important because the dates typically coincide with volatile price action, and the next date coming up is February 26th. So the week preceding that, I think the green here, I'd expect some sort of shenanigans in price activity. So it's hard to be not bullish. Right? It's hard not to be bullish on everything you're seeing here. Obviously, we're getting tons of new money. You know, it's just simple supply demand. If there's more coin being bought than sold, price goes up. And right now it looks like there's a hell of a lot of coin being bought.